The Bank of Korea decides to hold its interest rate steady for the fifth consecutive time at 3.5% due to concerns over weakening investment and consumption amid growing economic uncertainties. Our finance correspondent Shin Ha-young reports.
As widely expected, the Bank of Korea announced another freeze, keeping its key interest rate at 3.5%. The decision was made on Thursday following a Monetary Policy Committee meeting.
Inflation is slowing down, but considerable amount of time will be required for it to stabilize at the target level. Considering rising economic uncertainties and the need to closely monitor household debt, we have decided to keep our tightened monetary policy. The Board of Governors voted unanimously to maintain the current tightening stance.
This is the fifth consecutive time that the BOK has decided to keep the rate unchanged. The base rate has been held at 3.5% since February, following 10 consecutive rate hikes to tame inflation beginning in August 2021. The BOK's latest decision came amid concerns over rising economic woes in China with a deepening real estate crisis in the country. Due to these factors, an economic recovery for South Korea in the latter half of 2023, as initially anticipated by the government, has become more uncertain. The latest decision reflects the central bank's intention to monitor the situation rather than imposing a hike, which could further weaken people's spending and investment. In fact, while the growth rate for the second quarter is higher than that of the first quarter, by sector, private consumption, exports, imports, investments, and even government spending have slowed down. Meanwhile, despite the economic slowdown in China, as well as a decline in South Korea's exports, the BOK on Thursday maintained its economic growth outlook for this year at 1.4%. Consumer price growth is expected to be at 3.5%. South Korea's consumer price index, a key gauge of inflation, has been cooling down. In July, it rose by 2.3% compared to the same month last year. This is the smallest increase in over 2 years and marks the 6th month in a row that the rise on-year has fallen. But there are still lingering factors that could raise prices, such as geopolitical risks and other accumulated pressures, such as higher public utility fees. Due to the BOK's latest decision, the rate gap between South Korea and the U.S. now stands at 2 percentage points. The widening rate gap, soaring household debt, and rising exchange rate between the Korean won and the U.S. dollar mean it may be some time yet before the central bank considers rate cuts. Shin Ha-young, Arirang News.